Thanks everyone for having us here. We're looking forward to this conversation. The next agenda item is happy hour. So we're going to do our very best to keep this part of the conversation fun, but really serious as well. Let's pick up, and we'll introduce everybody in turn, but let's pick up from the observation that Jennifer made. How does it feel to be on the other side? And if that's our insight, if our third-party vendor colleagues, our technology partners, our counterparty banks, and our regulators feel that we're adversarial, that we're on opposite sides, we lose. Because the bad guys are the ones that will win. So the observation is, we're all the good guys in this respect. And we've got to get better. We agree with what Jennifer says. This conversation is now about what do we think those capabilities are, and what's the second-order impact that comes out from these capabilities. We hope to be able to take the conversation forward. So applying our human analytical capabilities, one of the people on this panel doesn't really look like a banker or a normal Justin from Cashshield. Introduce us to Cashshield. What are those capabilities that you have today that are finding bad guys in real life? What are those capabilities, Justin?
Thanks a lot. Very happy to be here today. So I'm Justin, founder of Cashshield, and actually I have probably 20 years of experience fighting fraud. I could still imagine that 20 years ago, the payment world is almost safe. So whatever payment you receive from PayPal or credit card is 100% safe. Until the first case of keyloggers where hackers are able to take over PayPal accounts and start to buy things online, and I realized that it's no longer safe. Which is why 10 years ago I started Cashshield. So now we have another 10 years of fighting very complex fraud today. And we're that kind of global end-to-end fraud management platform that helps companies regarding any kind of fraudulent activity. And it's very complex now because you are facing fraudulent activities not just on payment front today, even on creation of fake accounts. So nowadays, just going on Google Play or iOS, you can find clone apps that allows you to create apps within apps. Thousands of apps within a single phone to create tens of thousands of fake accounts. Why? So they do this for, let's say, creating fake accounts to abuse promotions. That's the kind of fraud that's different from coordinated attacks because it's almost like dealing with every single person within a country trying to fraud and beat the system. It's a different kind of use case. And we have that kind of decision capability within 0.1 second to detect this as well. On the other hand, we face cyber criminals trying to create thousands or tens of thousands of fake accounts to wait 6 months to 12 months later before launching a large-scale attack as well. So it's a kind of difficulty in this industry that we face today. So end-to-end for us also means against large-scale account takeovers, trying to use a fraudulent credit card to top up e-wallet or fraudulent agents to top up e-wallet, to P2P paying or sending payments around the world, where you will have risk against AML, or to pay at any vendors around the world with a cashless app. So you can see that fraud trends has evolved so much that it could come into an organization from every single angle. And definitely happy to be able to share more later.
Thanks so much. And we'll leave time for questions. But that's the point. The bad guys are continually developing their suite of weapons. They've got ship-to-ship transfers to evade sanctions. They've got forged documents to get through initial onboarding controls. They've got digital identity spoofing to get through mobile payments and then be able to deploy at scale. Instead of $1 billion through a front company, it's $1 billion $1 payments through multiple spoofed mobile wallets. Those capabilities are the weapons suite of the bad guys. The good guys need our toys too. The next person on the panel is Brandon Daniels from Exeter. Brandon, tell us about the toys that you're giving the good guys.
Sure, yeah. So Brandon Daniels, I'm the president of our tech business at Exeter. Exeter, more broadly, is a financial crime compliance and risk management company. But the thing that defines us is that we believe that technology is a critical component of financial crime risk identification and then apprehension. And so when we look at the problem, as Jennifer had mentioned, we look at it as being both identified by data and then arrested by data, right? So to give you an example in a matter that I was working on, instead of taking a group of investigators to this matter, and what we were looking for was a potential human trafficking ring in a set of financial transactions, both financial transactions in transaction activity as well as insurance policies that have been taken out by this group of individuals within the same sort of institution. Instead of bringing investigators to it, we actually brought analytics. So the first thing that we did was we used a set of technology that was called feature generation technology. And it helped us to identify what were the common data points inside of this small network of potential financial crime that were important or were common, right? And one of the things that was interesting was we found that one of the individuals was continuously across restaurants that they own charged with labor abuses. We then found that that individual had common addresses, common phone numbers, common websites, common LinkedIn accounts with individuals that were also policyholders on the insurance side. And some of these policies were outstripped. I mean, these were chefs in kitchens and small restaurants in the middle of New York. And so this bit of commonality, this feature generation, gave us an indicator that there was a network. And then we started to look at the criminal activity. So we saw early redemptions on the insurance policies. We saw connections back to an organized crime syndicate, actually in China. And we found these, again, only through data attributes. So an investigation that would have taken, 2, 3, 6 months, a year, 10 years ago, through the interrogation of data, was able to be done in 4 minutes. We were able to identify the network, identify the criminal activity through this first feature generation technology and what we call decision analytics or risk classification technology, which is emulating human decision making. And then finally was the presentation of the risk, because even if I find spots of risk can sometimes look pretty disconnected. And so the last piece was visualization, right? And that visualization took a bit more time because that's where you introduce the subject matter expertise. You introduce the person that knows where the connections might be meaningful or what's material versus what's immaterial. And that's where the investigation really took root, and we were able to identify 4 regulators, potential human traffickers, and exit from the customer and from the regulated financial system, potential bad people. People that were harming people that had routinely done things that clearly were against the law. And so the kind of public service announcement to all of this is, today we are using this technology and we have shortened a process that used to take months to minutes, but think about the scale that we can do it at now too. Yeah. If it takes 2 minutes to do that kind of investigation, well, I could do that 1 billion times over. And so if there are any money launderers or sanctions evaders that are listening, the technology is there and it's real.
Awesome. Thank you, Brandon. So capabilities which are differentiated, which are next generation, and which exist today. Cashshield also has those capabilities as well. Let's turn to Phil. I've practiced this a lot. Phil Cotter from Refinitiv. So tell us about the next generation capabilities that Refinitiv has, Phil.
Sure, thank you, Chee. So first of all, for those of you not familiar with Refinitiv, we used to be part of Thomson Reuters. We like to think of ourselves as the world's largest startup. Look, I was very interested to hear what Jennifer presented, because we are using technology, working with open source data to also try to create a score that indicates the probability of risk of doing business with an entity. We're particularly interested in applying this to shell company structures and connectivity that companies have to be able to create transparency through the very, Byzantine structures that criminals use to hide their activity. We've done a number of POCs, particularly with regulators in this region. We know that what we're developing has very powerful insights. We know that it's very helpful in identifying gatekeepers. For those of you not familiar with that term, these are people who typically control the flow of monies back to the countries where their criminal organizations are based. So this technology is real. This technology is really beginning to have an impact. And I think what it will enable us to do is to ensure that we're applying our human intelligence to those areas where we're most able to make the best use of it. So yeah, this technology is real, and it's coming to a bank near you very soon.
Thank you so much. Now, one of the things of being on the same side is we tend to start sounding the same. So let's start injecting some debate and some back and forth into these capabilities, and let's just double test what we've all been talking about so far. So Jennifer, based on what you've been hearing, based on the strategy that you've outlined, are these capabilities complementary, consistent with the direction you're trying to go?
Well, it depends. One of the challenges we always have when we're talking to maybe particularly the startups, the fintechs and the regtechs out there, is trying to figure out how we integrate it into a bank of our size and scale it. Oftentimes, some of the solutions are fantastic, but if we can't figure out a way to scale it, then it doesn't. It's not going to help us. So I'd say that's our biggest challenge. How do we scale it, and how do we make it work on our particular data?
Okay, so fantastic. So first conversation, right? How do we then see all these new toys and then bring them together in a deployable way, where in a sense it becomes useful to us as financial institutions? What are those one or two things that you would say are the most important things in terms of people trying to integrate with HSBC that you need to see from them?
Yeah, well, one is what is their plan to scale? So one thing that has been particularly successful, and sometimes we help the relationship along, or sometimes a fintech will come with the relationship, is maybe to partner them with a bigger existing company out there, maybe an EY or a Deloitte or Accenture, something like that, that can help them to scale their solutions so that we can integrate them inside. So that's one piece of advice. The other is really probably some patience, because when you hit a company of our size, things do not operate in a week. We're not able to be quite as agile. As much as we like to pride ourselves on starting to bring in agile methods into HSBC, they're not agile like a 10-person startup. And so things are not going to move on a dime.
So we have a sales and procurement cycle, right? So the management of expectations, please cater to our sales and procurement cycle. So that's in terms of the strategy for integration. That's also in terms of the approach to the sales cycle. Is there a conversation? What does the panel think about, how to integrate then with large financial institutions? Of course, HSBC is way bigger.
Yeah, so maybe I can. We're a big data company. We have lots of partners. Many of them are startups. Again, I think one of the challenges is beyond the POC. Do you have the SME expertise to support that larger organization? Can you commit the resources that are required to take it from POC to something that's in production? If there's a piece of advice to people who are out there building their business today, and I'm sure Justin can talk about this as somebody who's been building his business for 10 years, but it's probably not to overpromise and underdeliver. It's really, let underpromise and overdeliver. I think is very important, step by step.
There's an elephant in the room, right? Because Exeger is integrated at scale with some very big boys. Cashshield is integrated at scale with some very big boys. And so is Refinitiv. So what's the secret here? As in, how did you achieve that? And is some of this underlying thinking, also the technology, the approach, the philosophy of the company?
I think from our approach, results matters. Going to these companies, is not really about the whole sales cycle, but is to make it as easy as possible, to make it no-brainer to test your solution. So so even for our integration API platform into their platform, we make it so easy that we research the whole way that their data is structured, so that we create that kind of data mapping into their solution and get them to please just map it over. Once we do that, once they see the results, everything else is easy.
Brendan?
I think you have to start with scale. You have to understand that the problem is at scale, right? There are over 25 million SWIFT transactions a day. So if you're going to bring a solution to the table that's going to analyze them or bring NLP to them, you have to know that you have to reach that scale at some point, right? So you have to start with scale. It reminds me of a story I heard with Steve Jobs, where a very angry audience member asked him why he had gotten rid of InfoDoc and moved everyone to Java. And he said, you know what? Java is more simple than InfoDoc, right? And I agree, there are some things in InfoDoc that are great that we're not bringing along. But he said Java is what's going to allow us to get to the next stage in computing. Java is what allows us to bring the holistic picture and to sell $8-10 billion worth of computer software and hardware. And so I think when you answer the question of, how do you scale, it's figuring out first how to do one thing really well simplified at scale, and then figuring out how to do the rest of the ensemble.
Okay, so that's the contribution from the vendor side, right? Hey, Jennifer, bad word in financial institutions, legacy technology. Really bad word, right? Yeah. Do we have a part to play in terms of also making ourselves ready for the next generation capabilities that we're seeing here?
Yeah, there's no question, because we're not going to get to that next generation if we stay ossified in terms of the technology we have. And so we do need to build the platforms that make it easier, whether that's to allow the API type of integration into the system in both directions, whether that's getting our data in a place where it can be used as part of a proof of concept without having gone beyond what the regulations around data privacy and outsourcing will allow us to do. So building those sandboxes that will allow development by a number of potential providers. So there's a lot we can do to make it more simple, and it's certainly on both sides' interest to do that, and most importantly, it's in society's interest for us to go after the bad guys.
Yeah, so I guess we've covered this whole thing about, look, we've got to have pretty consistent strategies. The vendors need to be able to work with us pretty well. We need to shift a little bit in terms of our technology architecture, our approach to things. You talked about your partnership with Google. There are questions coming up on what's that like, So I think we've covered one big part of the conversation, which is making ourselves ready and getting that infrastructure to be able to kind of like ingest and manipulate data at scale. Okay, so maybe let's move on to another part of the conversation, right? Now that we've got these models deployed, how do we make sure that they're working correctly, right? And maybe two negative consequences. The first thing is, let's say a model gives output that we rely on, and there's a mistake. The regulator says, hey, why did you rely on the model, right? So that's one point, and you need to explain why you did it. The second negative consequence is also that model may not reflect society or the upstream data as it shifts over time. So we need a new suite of capabilities in addition to infrastructure and strategy that also comes in if we want to harness these new capabilities. Jennifer, talk us through HSBC's experience in that area.
Yeah, well, I think part of what you're getting at is a question of perhaps ethics, fairness. Just because we can do something technologically, or even just because we can do something consistently with the law, doesn't necessarily mean we should. Yeah. And so it's certainly a question that we take quite seriously at HSBC. we've been kind of following the market practice in this area as we develop our own thinking, and have made it a very firm choice that as we develop the next generation of technology and tools we want to apply, at the exact same time and in parallel, we're developing our framework on how we want to think about these questions.
Yep.
And I think you hit one of them, which is being able to explain any of the analytics and the technology we use. We don't buy into this idea of having black boxes where we can't explain how the machine came to a decision that we're now relying on, and ensuring that there are humans somewhere in that process making key decisions, and that we can explain what the machine did.
Yeah. So this is a fascinating philosophical question, right? There are many, many layers on this. In fact, perhaps one of the top level questions is it right to go into transactional data and to look for criminals? Is that correct? Let's not try to answer that question here, right? Let's get into the other details. There was another bad word introduced there. So legacy systems, legacy architecture is a bad word. Black box has also got a certain amount of attention with regulators and the academic literature. Justin, what's your experience in terms of explainability of your models, or how do you respond to people challenging you on, hey, tell me about your models?
Sure, I'm more than happy to help with this. So I think before we talk about models or black boxes, the number one thing that we usually try to focus on is pinpoint accuracy first. Because without the kind of results being as accurate as possible, where over the past 10 years when we work with large enterprises, we realized that they themselves has a very, very good way of validating the accuracy of our models. So before we even talk about models, we have to have the best accuracy ever. Talking about like stacking of models is another thing that we are very cautious of, because the way algorithms are created from, let's say, the banks or the enterprises or the industry or the vendors is very, very different. So trying to stack both models is actually quite risky, because you're talking about, I don't really bake cakes, but suddenly it came to my mind of, let's say if you get both of the best recipe of cakes and then you mix them together, they don't blend well, right? I don't think so. But so it means that we first have to be very, very precise in accuracy. And in regards to explaining about models, what we view it more is more into how we market the model. Because we identify that through our experience that there's three kind of users of models, of that kind of why they require reasons regarding the model. First is control freaks. So control freaks are people that they want to see every single thing within the model and try to be able to just have that control, right? And the number two is I don't care. So as long as you give me the results, I don't really care about all the reasons, all the models. But it's interesting that actually there's the third user, which is they are control freaks for like 1 to 2 months, and then after that they become I don't care. So I think it's still necessary on having models to explain to a certain level of explanation of the reasons, but it also have to take note of being able to explain more of the relevant reasons and not just tell them that there's 1,000 reasons why you reject a transaction, and then they will just try to stack the models and it doesn't end up well.
Yeah. So that's fantastic, right? Control freak, I don't care. Brendan, what's your view on where we strike that balance?
Yeah, I guess I'm a control freak. So I think that taking calculated risks to achieve otherwise unattainable results is courageous. I think taking risks without rationale is reckless. So I believe that there has to be explainability as we deploy artificial intelligence or machine learning models. And there is a primary component of data science, which is how do you explain and understand how a candidate model works before you promote it into production. And we should be using that work. right? There is the functionality today inside of most of the data science toolkits to look at, for instance, feature importance. Do I have something that is oxymoronic that I'm relying all my decisions upon, right? And it's that kind of tool set that we're using today in data science that can be ported over to the regulatory space and can be applied. And I understand the concerns about IP. I understand the concerns about in a lofty benchmark, like today humans do it perfectly and machines do it worse. You know, that's not a healthy tack to take. So we do have to have an open dialogue with regulators to make this work. You can't take old-fashioned rules-based model validation to this new area, but at the same time, with both understanding and risk-benefit discussions with regulators, I think we can get to both explainable and usable models.
And that's an important idea I think you bring up. There's this belief out there in some quarters that humans do everything perfectly. And that complex human judgment that are done across thousands of individuals is consistent and done to 100% accuracy. So clearly we need to spend more time on that concept.
Yep, and it's perhaps flawed as well, right? Just a fundamental assumption that the human's going to get it right. Yeah. Phil, we'll come back to you because I know you've got a lot to say about, in a sense, the role of regulators in supporting this. I just want to pick up maybe one point on this whole thing about control freak and I don't care. Jennifer, is there room for us to also evolve our frameworks to basically say, you know what, if it's really important and I'm going to turn off legacy systems and the consequence of this decision is going to be, in a sense, a criminal pronouncement on somebody, that's really risky. So I'll be control freak, right? But in this type of a scenario, it's not so complex. It's a recommendation based on which a human then applies a normal process. Maybe I can be a bit more, I don't care. Is that consistent with HSBC's thinking?
Yeah, I think it comes back to the idea of calculated risks. And the whole system is based on a risk-based approach. There is not a regulatory expectation anywhere globally that we do everything perfectly, and it's not possible, so it's a good thing that that's not the expectation.
Yep.
So it's about figuring out where to take those calculated risks, looking at what it is we're actually trying to achieve and to achieve the benefit. So I'd like to see more of us in industry remembering each day that our focus is on managing financial crime risk, not just managing regulatory risk.
Yeah. Awesome thematic point. Okay, so, we've got consensus, right, in terms of infrastructure, the need to move, the need to work together, we're all on the same side. We've got to come up with the frameworks around use of data, model governance, model validation. That's all stuff we need to do.
Can I add one point?
Yes, Brandon.
I think it also is the difference between episodic versus systemic regulation and supervision, right? So an episode can occur. An episode can occur if we've got, the best investigators reviewing information. If I'm turning over to them 1,000 cases every day and almost all of them are false positives, they will eventually just think everything's false positives, right? So in human systems, you can have failure. In automated systems, you can have failure. And we have to start looking at how are we systemically managing financial crime risk. And I think, that's where regulators, progressive regulators, are starting to help us achieve, new standards for model validation and beyond supervision.
Okay, so the R word has come up a lot now. Phil, maybe slightly broader than, data privacy, data localization. You know what? That's stuff we've heard a lot already. What are the best things you've seen from the regulators? And what can we do to help those conversations along as well? What are those things that kind of really shine out in the industry?
So I think a number of points. I mean, obviously this is a great example. Here in Singapore, world's largest fintech festival, I know that MAS are a big supporter of this. I mean, in the UK, the FCA have been very supportive of the development of, fintech solutions to help fight financial crime. I think one of the things we should remember, though, are that criminals are global in their nature, okay? They are not limited by boundaries. Many of today's large money laundering scandals are global in nature. And I think Jennifer said we're all together on the same side, okay? This is about fighting financial crime effectively, protecting our societies. So I think, I'm very encouraged by the approach that the regulators are taking and working with all of the players in the industry to determine how we can best adopt this technology to fight financial crime. I think, from a Refinitiv's perspective, we announced our financial crime coalition with the WEF and Europol, etc., at Davos about 12 months ago. We believe that greater public-private collaboration is the best way that we're going to fight crime at the end of the day. So I'm very encouraged by the progress, particularly in this region. But we all need to continue to work to make sure we can build that trust and that partnership that's required to really be effective here.
Does the panel have any other views on best practices from the regulatory perspective?
Just one additional example, because I echo the thoughts about MAS and the UK FCA in terms of regulators that are progressive in this space. One other set of regulators that stands out to me are those in Mexico. Which is actually interesting because I think it came from a place of really having a lot of financial crime risk that they were trying to deal with as a jurisdiction and worrying about their own economic viability in terms of banks and others wanting to leave the jurisdiction. So it started to become a real economic security issue for them. And born out of that kind of trouble, they have become some of the most progressive and knowledgeable regulators that we interact with globally and have really kind of put some innovative solutions in place.
And I think that's a good point because I think a lot of central banks are beginning to see money laundering as a systemic threat as much as a regulatory issue for them nowadays. If you look at the Latvian issue on the fringe of the Eurozone and what the ECB are now trying to do to effectively become the central money laundering authority, I think the scale of money laundering today, running into billions and billions of dollars, could bring economies down. Particularly in some of the smaller, weaker economies.
I had an encouraging conversation with a regulator, I think it was 3 weeks ago, where the person turned to me and asked me, who else is challenging you?
Yeah.
Right? And I think that's such a great question, right?
Yeah.
Who else is progressive? Who else is pushing the limit? Because I want to talk to them.
Yeah.
And so I think also regulators reaching out of the jurisdiction and the progressive work that they're doing in their jurisdiction and trying to create global consensus allows us to not have this cottage industry of regulation and policies and framework which stops us from moving forward in many areas.
Yeah, and that idea we don't know, but through that challenge, right? Hey, have you thought about this? Or you could be wrong here. Hey, that interaction actually is what's producing the correct idea. Okay, so we're out of time. We do need to go to some of the questions that you've asked the panel. So I'm going to switch to the pigeonhole questions now. And I'll pick a few questions, and then maybe we'll finish off there in terms of the questions with the highest number of upvotes. Okay, so I'm just going to pick one of these questions, which I think I'm going to pass to the most qualified of our panelists in terms of interaction with law enforcement. Payments business is extremely fragmented on a national and even more global level, right? How can law enforcement be supported by a network analysis tool throughout the overall system? And I think, Jennifer, you probably have views on this. Brendan, you definitely have views on this.
Yeah, I think there's a lot of different ideas that folks are bandying about on this question, but one that has struck me recently came out of the FCA's tech sprint in London this last year. And one of the teams that put forward an idea started talking about the idea of filing network suspicious activity reports. So having banks actually put together the networks like we often do during the course of our investigations, but file the information related to that entire network as part of the SAR. And when I think about that, if we did that and we did it in a way that enabled the government on the other side to take the underlying data in its network state and combine it with the other banks' networks that they were putting in, it would move the ball forward for investigators far ahead of where it is now, and it wouldn't require any regulatory changes around the allowance of utilities and sharing of data, which can start to get a bit tricky. This is something that jurisdictions could start doing tomorrow.
So on the payment side, I mean, the one thing that we have to remember is that the goal of a payment is not to be stopped, right? I mean, you want a payment to go straight through processing, right? You want people to have access to the money that they've earned and that they've worked hard for and that they've sacrificed their time with their families for, right? And so it's a sensitive subject. But I think this is one area where legacy infrastructure holds us back from getting really far, right? So you look at average payments data, right? You look at average information, and you could be the best bank in the world when it comes to payments data personally, but you get garbage from everybody else, right? And so I think that there's a requirement here from a payments perspective before we start moving to network analysis to say, hey guys, we need better standards in terms of our payments information and our payments exchange capability.
Yeah. Even consistency, right? What do you put into a Swift message open field?
Oh my gosh. What goes into field 21?
Yeah. Okay. Happy hour coming. I do want to give the two colleagues on the panel here. Yeah, actually, we're having a good time here, as you can tell. Okay, I want to leave the last word to my two colleagues here. I'm going to pick one more question, and we'll just go to it, right? So there are FANG companies, right? Facebook. You could debate whether that's Alibaba or Apple. Netflix, Google. Oh yeah, I think it's FANG. It's not FANG. What can we learn from the tech companies in terms of harnessing, in a sense, data at scale or technology at scale to mitigate financial crime risks? Phil?
Well, I think the first thing is realize we're all in the information business, okay? I mean, we are information companies, and as financial services and other related industries become more and more digital, then much of what Facebook and Apple, etc., apply in terms of analytics to understand their customers are things that I think we can also apply to fighting financial crime. I think there's also a lot that we can teach Facebook and Apple and Network and Google as well. When you think that Facebook have several million false identities on Facebook, there's things that we can teach them as well. But look, I think, we are in the information business. We need to remain continuously curious about new technology and what it can do to help us fight financial crime. And I think, there is lots that we can learn from these companies. Many of us are working with them on their cloud-based technology, etc. So I think, embrace them and use them, work with them as partners, and understand how they apply analytics to the challenges that they face in their businesses as well.
Awesome. We'll give Justin the last word.
Sure. We do work with some of them, and from what we learn from them, or what we think that could be applied at the banking sector, is that for them, they think about scale first, which means scale first and then risk. Why is it important is because imagine that the first fundamental of getting a business up or facing the risk is to get adoption of users. So the pushing of adoption at scale while trying to have a lot of fast way or technology to cope with anything that's coming towards you, I think that's what we learn from them. So the other side of what we perceived in the banking industry, sorry if I'm wrong, is that we are trying too much to control before getting the users up. So this is what we learn from them.
Yeah. Okay, thanks so much. We are completely out of time. I hope this conversation has been useful, both in terms of talking about the opportunity, but also in terms of kind of like leveraging real experiences from colleagues who have deployed capabilities, and also looking at those differentiated aspects about how we bring all these together into producing a single view of the customer. I'm in full agreement, that's the way to go, and we're all on the same side. Ladies and gentlemen, please join together with me in thanking our panel. It's been great. Thank you for having us here.